Hey guys, welcome to another amazing OctaFX YouTube webinar. We are still on the online workshop for complete beginners, and today we're going to be talking about predicting the market, right? But before I go into the talking points of today's webinar, go ahead and type in the comment section your name and where you're watching me from right now. Go ahead and type in the live chat your name and where you're watching me from right now. You can also go ahead to tell me how long you have been trading the Forex market. Okay, yeah, before I go into the talking points, let's talk about some bonuses that you can get from watching an OctaFX webinar. The first one is 100% single use deposit bonus per webinar series. How do you get this? You sign up or confirm your participation on the OctaFX website, and you watch all webinars from the series. You wait for an email from OctaFX, confirming that your bonus is ready, and you can initiate a new deposit request and claim the bonus for this deposit. The bonus expires on the 5th of May 2022. You also get a free trader's guidebook in PDF. If you watch all the webinars from this series, you stay active, you ask me questions in the comments, you ask me questions and answer my questions, then you'd get your PDF handbook via email once the webinar is over. All right, let me look at the comment section to see who we have here. Michael Abraham from Gombe, welcome. Ojo from Benin. Emmanuel Jeremiah from Abuja. Kenneth from Lagos. Samuel from Lagos. Olatunji from Ibadan, Nigeria. Okay, welcome. Ojo says he has been trading since 2020. Okay. We have Valaya from Adamawa, if I pronounced the name correctly. Daniel from Edo State. And I'm not going to go on with the names, because if I do that, then we would not start the webinar. So I'm just going to go ahead but massive welcome to you guys, by the way. I'll start with what you would learn today. What are you going to learn today? The first thing you'd learn is, orders opened and closed by market price. You're going to learn 4 most important type of news, in the economic calendar. I'll talk about take profit and stop loss and why you need it, and I'm going to talk about fundamental and technical analysis. Okay, so the first thing we're going to look at is obviously orders opened and closed by market price. Now, what is an order? An order is an instruction sent to your broker to open or close a transaction. It could be a buy order or a sell order, right? It's kind of like an instruction where you tell your broker, open a trade, close a trade. It could be a buy or sell instruction that you'd give to your broker to open a trade or close a trade. Now, for open orders, you can call an open order if you enter a buy or sell trade at a specific market price but haven't achieved a financial result. What I mean by financial result is you have not closed the trade, right? So, for example, you place a buy or a sell at your specific price. Let's say you want to buy an instrument at, let's say, $40, right? And your trade has not, the trade is just running, it's open, it's running, it has not been closed. That's what I mean by achieved. You haven't achieved a financial result. So an open order is when you enter a trade. It could be a buy, it could be a sell at a specific market price, but you haven't, closed that trade to know if to know the financial result of the trade. Now, if you buy an instrument expecting it to increase in value, you have opened a buy position. And if you sell a currency pair or an instrument expecting it to depreciate, to decrease in value, then you have opened a sell position, right? So that's on open orders. Now, for closed orders, you can say an order is closed when the financial result of the open position is achieved or fixed. Now, remember, for open orders, you just opened your trade, you haven't closed it yet, you haven't achieved the financial result, right? The trade is just running, right? Now, for closed orders, this is when you've closed that open trade and you have achieved, your financial result. Now, if the instrument grows in value after opening a buy position, the closed position will record a positive financial result, which is going to be a profit. If your trade or the instrument depreciates after you enter a long position, the position will close. The position that will be closed would yield a negative result, which is a loss. Remember, when you're buying, you're expecting whatever instrument you're buying to increase in value, right, so that you can make profit. And when you're selling, you're expecting the instrument to decrease in value, so that you can make profit. Now, I didn't say this earlier, but if in the course of this webinar you have questions, you can go ahead and type the questions in the comment section. I'm going to constantly check to see your questions and answer your questions. Okay, so how do you open and close orders, right? Now, for open orders, you can open orders by market execution, which is going to execute your trade instantly. It's defined as market execution, or it's also called instant execution, which means if you're placing a buy or a sell, you're placing it at the market price, right? It executes instantly. For pending orders, this is where you open your trades at your preferred price, right? At your preferred price. Let's say, for example, a certain instrument is at like $50, and you want to open the buy or sell. If you use the market execution type of open order, it's going to execute at that $50. It's going to execute at the market price, right? But if you prefer to open or to buy or sell at, let's say, $60 or $70, just for example purposes, which is going to be your preferred price, then you can use pending orders. Okay, so that's how you can open order. Now, for buy orders open at the ask price, and sell orders open at the bid price. So if you go to your trading app, you're going to see like two lines that would indicate two prices, right? The one above is the ask price, and the one below is the bid price. Okay, so when you place a buy, your buy orders would be opened at the ask price, which is the one above, and sell orders would open at the bid price, which is the one below. So for closed orders, you can close your orders manually, right? You can decide to close your open orders. Closed orders are like when you're closing a trade that is open, that is already running. Don't forget that, guys. So you can close your trades manually. You can just decide to swipe and close your trades, or you can use take profit and stop loss levels, right? So it's going to close automatically if you use take profit or stop loss orders. Like, this is where you tell your broker that this is where I want to take my profit, or this is where I want you to stop me out. If this trade decides to go against me, I don't want to lose so much, so stop me out here. Okay, so the trade closes automatically even if you're not online. That's for take profit and stop loss, right? Or you can just close the trades manually by yourself. So buy orders close with bid price, and sell orders close with ask price. Okay, so let us look at so this is on how to open and close orders, and this is a definition of opening a buy or sell order in the market and closing a buy or sell order in the market, right? So we're going to look at the four important type of news. Now, generally speaking, as a forex trader, it's important that you look at economic news to assess its impact on interest rates and monetary policy. Don't forget, guys, you're trading currencies, right? And the economic result or reports from a country definitely has a certain impact on the currency, right? So you want to pay attention to what's happening in the economy of a particular country, because it's going to have an impact to the currency of that country. Okay, so four most important type of news. The first one is the non-farm payroll, which is abbreviated by NFP. The second one is consumer price index, which is abbreviated by CPI. And the third one is gross domestic product, which is abbreviated by GDP. And the fourth one is Federal Reserve System, which is abbreviated by Fed. So this is going to be like more like a theoretical class. We're not going to do any solvings or any calculations. So this is just going to be to explain to you guys the events that happen in the economic calendar, because it's important, right? While you understand the technical aspect of trading, it's also important that you look at the fundamentals and economic events that happen in the economic calendar. So the first one is NFP, which is non-farm payroll. Okay, so what is NFP? NFP is part of a monthly report that represents how many people are employed in the US in manufacturing, construction, and goods companies, right? NFP gets its name from the jobs that are not included, which are like farm workers, those employed in private households and non-profit organizations, right? Now, what does the NFP report contain? The first one is the non-farm payroll increase. So this is like the number of jobs, number of new jobs added in the US labor sector in the previous month, and the data that is increased that is released includes reports on the manufacturing sector, construction, and the goods sector. The second one is the unemployment rate of the US. How many people are unemployed in the United States? The third one is the sectors with the mostly added jobs. Now this is going to give investors and traders idea of which possible sectors to invest in, as jobs, as sectors that added more jobs would more likely be possible, or good sectors to trade or invest money in. The fourth one is the average hourly earnings of the workers in the United States. And the last one is the revision of the previous NFP. So what you can do with the revision of the previous NFP is you can compare this report to the previous report and know if the NFP is in an uptrend, if it's increasing in value, or if it's decreasing in value. This is going to give you an idea if the economy is actually growing or reducing. Now the NFP is released every first Friday of the month at 8:30 a.m. Eastern time. Okay, so if you want to know what time this is in your own country's time zone, you can just do the conversion and know the exact time NFP will be released in your country's time zone. Okay, so that is on NFP. The second important event in the economic calendar is the CPI, which is the Consumer Price Index. The CPI. So what's the CPI? The CPI is an index released by the US Bureau of Labor Statistics that measures the change in price of a representative basket of goods and services such as food, energy, housing, clothing, transportation, medical care, and education. The CPI measures inflation as experienced by consumers in their day-to-day living expenses. It's also called the retail price index or the cost of living index. Now, these items relate to savings and not day-to-day consumption expenses. The CPI does not include investment items such as stocks. It does not include bonds, real estate, and life insurance. The CPI is also known as is also used widely and mostly by traders as the indicator of inflation. Now, what is the importance of CPI? The CPI is a key indicator to measure inflation and changes in purchasing trend. So this is going to give the central bank the necessary supportive data to hike interest rates, and higher interest rates are bullish for a country's currency. Where can you get the news? Where can you get the reports on NFP, CPI, these four important news that happen in the economic calendar? Where can you get it? All you have to do is to take advantage of the OctaFX economic calendar. You go to OctaFX.com and you want to come down to analysis and education, and you want to come down to economic calendar, which is right here. So this is where you're going to get reports that have happened, reports that are happening and will happen, right? So you get reports on the increase in, could be unemployment rate or decrease in unemployment rate. It's going to give you in percentage so that you can track and know if a country's economy is actually increasing or the country's economy is reducing. Okay, back to CPI. So the CPI is released at 8:30 Eastern time, on the second or third week following the month being covered, right? The CPI is released at 8:30 Eastern Time. What I told you guys is if you don't if you want to know what time the CPI will be released in your country's time zone, all you have to do is to do a conversion of the Eastern Time to whatever time zone your country is using, and then you get the exact time that the CPI will be released in your country's time zone. It's also important that you look at CPI excluding food and energy, where some of the more volatile and closely watched pairs are clothing, tobacco, airfares, and new cars. Now, the CPI or the increase in CPI is what most people think of as the inflation rate, right? It's used by retailers in predicting future price increase. It's used by employers in calculating the salaries, and it's also used by the government in determining the cost of living increases for social security. Okay, so you can get reports on the CPI in using the OctaFX economic calendar. Remember, released at 8:30 Eastern Time. Do a conversion to your country's time zone to know exactly when the CPI will be released. Okay, so the third important economic event is the gross domestic product, right? GDP. What is GDP? So GDP is the total value of goods and services produced in a country over a specified period, right? It's the total value of the goods and services produced in a country over a specified period. Now, the GDP was adopted as the main measure of a country's economy at the Bretton Woods Conference in 1944, right? The GDP includes government spending, business and consumer consumption, net exports, investments, and it does not include sales of used goods, illegal activities, black markets, non-monetary compensated work, and unpaid work. So GDP is typically calculated yearly but can be for any time period, right? Now, what is the importance of GDP? The GDP is going to tell you as a trader if the economy of a country is expanding by producing more goods and services, or if it's contracting due to less output. The GDP also tells you as a trader how a country's economy is performing relative to other countries' economies around the world. Now, remember, in Forex, when trading currency pairs, you're trading a currency that is being quoted against another currency, right? So you want to definitely look at the performance of the economy of these two countries, right? Identify the strength and the weakness in these two currencies that you want to trade, which is why it's important to look at or pay attention to the reports from GDP, CPI, NFP, all these economic events. Okay, so the GDP data is released during the final week of the month. The first estimate is released during the final week of the month, immediately following the end of a calendar quarter. Now, the gross in GDP indicates that products are counted regardless of their subsequent use, right? A product can be used for consumption, can be used for investment, can be used to replace an asset. In all cases, the product's final sales receipt is going to be added to the total GDP figure. Now, for domestic, this means that goods and services are counted regardless of who the producer is. For example, if a Japanese businessman produces or creates a product and it is within the United States, it's also going to be calculated in the United States GDP, right? So goods and services are counted that are produced within a country's border regardless of the nationality of the producer. Okay, and then product is the actual product that is being produced within a country's border. In the United States, GDP is measured by the Bureau of Economic Analysis within the US Commerce Department. Okay, so like I said, if you want to get reports on GDP, you can take advantage of the OctaFX economic calendar, and you see the reports on GDP. Okay, all right, so fourth key economic event we're going to look at is the Federal Reserve System, which is also known as the Fed. So the Federal Reserve System, or the Federal Reserve, is the central bank of the United States. It was created by the United States Congress in 1913 to provide the US with a safer and stable monetary and financial system. Now, the chairman of the Federal Reserve is Jerome Powell, who assumed office since February 5th, 2018. He is the 16th person to have held the position and will serve a 4-year term. Now, before Jerome Powell's appointment, he served as a member of the Board of Governors from May 25th, 2012, and he's also, is currently the chairman of the FOMC, which is the Federal Open Markets Committee. I'm going to go into detail on what that means later, but basically they just look after monetary policy. Okay, so what is the goal of the Fed? What is the goal of the Fed? Now, US monetary policy is the core mandate of the Fed, and they achieve that, or they obtain that using these goals. The first one is price stability and sustainable economic growth. Now, the Fed, defines price stability as an inflation rate of 2% in the long term. Second one is adequate long-term interest rates. This works alongside, price stability. When an economy is stable, the long-term interest rates remain at a moderate level. The third one is maximum employment. This is also, a monetary policy that is set out by the FOMC, which ensures that unemployment remains at a low. They're constantly working to boost the economy where it's needed, so that businesses can thrive and can make profit, and more staffs can be employed to these businesses. And the fourth goal of the Fed is to preserve the purchasing power of the US dollar. Okay, preserve the purchasing power of the US dollar. Now, the monetary policy that is set by the FOMC, which is the Federal Open Markets Committee, basically what they do, like I said, what they do is they oversee, open market operations of the Federal Reserve System. Okay, now there are three key entities in the Federal Reserve System. The first one is the Board of Governors, the FOMC, which is the Federal Open Markets Committee, and the Federal Reserve Banks. The Board of Governors, which is an independent agency of the federal government, the FOMC, which consists of the members of the Board of Governors and the Reserve Bank presidents, and the Federal Reserve Banks, which are operating arms of the Federal Reserve System and are supervised by the Board of Governors. Okay, so we have 12 federal banks in the United States, and in establishing the Federal Reserve System, the United States was divided, geographically into 12 districts, and each district were, separately incorporated with a reserve bank. Now, the 12 districts are, Boston, New York, Philadelphia, Cleveland, Richmond, Atlanta, Chicago, St. Louis, Minneapolis, Kansas City, Dallas, and San Francisco. Now, each of these banks, they're responsible for a specific geographic area of the US, and they operate independently but with supervision from the Board of Governors. Okay, let me know if you guys can hear me now. Somebody said something about mic. Let me know if you guys can hear me. Okay. So, FOMC meeting refers to the 12 members of the FOMC that meet 8 times a year to discuss, monetary policy as well as economic and financial forecast. Now, FOMC are key events in the financial markets, and for traders, the meetings are considered as the most important events in or on the economic calendar. So it's important that you take note of these 4 key events that happen in the economic calendar, or these 4 most important type of news: non-farm payroll, consumer price index, gross domestic product, and Federal Reserve System. All right. So I'm going to move over to explaining take profit and stop loss and why you need it. Take profit and stop loss and why you need it. What is take profit? Take profit is also abbreviated by TP. So that when you're in a gathering of traders or forex analysts, you don't get confused when they say TP or SL, talking about take profit and stop loss. So take profit is an order sent to your broker to automatically close an open position in profit at your preferred price, right? It's an instruction, an order that is sent to your broker to automatically close an open position in profit at your preferred price. So let's say you buy an instrument at a certain amount and you're like, you tell your broker, by using a take profit order, that I just placed this trade right now, or I want to place this trade right now, but this is where I want you to take profit. If it moves in profit to this level, automatically close the trade for me at this price, which is going to be your preferred price. Right now, even if you're not online, even if you don't have, like, you're not on your trading app, as long as you have put that take profit level, your preferred price, your broker is going to close your trading profit at that specific price if market gets to that price. Right now, this is going to halt any further advance in profit, but it's going to guarantee that specific profit when that level has been hit. Right, so if for example an instrument is at, like, let's say $20, right, and you want to buy this instrument, and you tell your broker using the take profit order that I want to take profit at, if this instrument gets to $30, right, now your broker is automatically going to close that trading profit for you. If you place the buy and it increases in value, gets to $30 from 20, which was the original price, remember, your broker is automatically going to close that order for you in profit. Right, even if the instrument decides to move further into profit, gets to $35, $40, it's going to secure that specific amount of profit that you want. Okay, that's for take profit. Now for stop loss, first of all, stop loss is abbreviated by SL, just so you don't get confused when the terms are being used. So stop loss is an order that is sent to your broker to automatically close an open position in loss at your preferred price should markets go against you. Right, so let's say let me still use the example I gave you guys on an instrument being $20, right? So let's say at that same trade, my profit target was like $30, right? Let's say I tell my broker that, okay, I've placed this trade, this is where I want to take my profit, $30. But if this instrument goes gets down to $15, close the trade for me. Right, the market price is, for example, $20, right? I want to take profit at $30. If it goes down to $15, if this instrument goes down to $15, close the trade for me. That's what I'm willing to risk. Right now, if you're not online, your broker is going to automatically close that trade as long as you have put your preferred stop loss level. Right, so the broker is going to close that trade for you, and it's going to stop you from it's going to halt any further advance in loss of capital. So if that trade decides to go against you and go further in loss, your broker is going to halt any further advance of loss as long as you have put your stop loss level. It's going to stop you out at your preferred price, which is the amount that you're willing to risk on that trade. Now, why do you need take profit and stop loss? Why is it important for you as a trader? Now, your most important job as a trader is to manage and preserve your trading capital, right? You obviously come to learn how to trade, take trades so that you can make profit from the market, but you should also protect your capital, right? You should also protect your capital, and one of the ways to do that is to implement take profit and stop loss on your trades, so that you don't just leave your trades to float without closing them at any point, right? So you don't expose your trading account to a huge amount of risk. So stop loss orders are implemented to ensure that losses won't grow too big, and take profit orders are implemented to ensure that you make profits from trades should markets reverse, right? So for take profit orders, let's say you place a trade and you don't put a specific take profit level, markets could get to where should have been your take profit level and reverse, go back down to your entry point, and probably go down in loss. It's not right for you as a trader to be in profit and then lose from that trade, right? So you need to implement take profit orders so that if market should reverse, you have secured a certain amount of profit. Okay, so that's why you need take profit and stop loss on your trades. All right, I'm going to talk about fundamental and technical analysis. It's important that as a trader you analyze the market before you place trades. You don't want to come into the market and start clicking buys and sells without analyzing or getting a level of confirmation on if you should actually take that buy trade or that sell trade. Okay, so fundamental analysis is a way of looking at the forex market by analyzing economic, social, and political forces that may affect currency prices. Remember, guys, you're trading currencies, right? And currencies are used in countries, right? It's important that you pay attention to these economic, social, and political forces that may affect these currencies, because it's also going to affect the market, right? Currency rates, the basic instruments of the forex market, are affected by major financial news, fundamental statistical reports, and geopolitical events. Remember, you can get that news from, or those reports from, the OctaFX economic calendar. It's all there. And there are other websites, investing.com, Bloomberg, where you can get forex news or reports on the economic events that happen in the economic calendar. Okay, so that is on fundamental analysis. Just a brief explanation of what it's about. It's basically, in simple terms, fundamental analysis is basically trading the news. Okay, that's what it's about. Now, for technical analysis, this is the study of historical price action in order to identify patterns and determine probabilities of the future direction of price. This is basically, technical analysis is basically trading based on what you see on the chart, right? Now, the main evidence for using technical analysis is that theoretically all current market information is reflected in the price, right? Now, as a technical analyst, technical analysts basically look for similar patterns that have formed in the past, and will form trade ideas believing that price could act in the same way that it did before. That's why you have candlestick patterns, chart patterns, indicators, support and resistance, trends, which are all included in technical analysis. Okay, so that's done predicting the market. I'm going to look into the comment section right now to see if you guys have questions. If you have questions, you can go ahead and type your questions in the comment section and I would answer them. I also have questions for you guys, so I'll ask the questions after I take yours. Okay. Okay, so since I don't have any questions, I'm just going to go ahead and ask you guys a few questions. So let's do a quick brain test, right? Okay. So I'm seeing some questions. All right. Can take profit or stop loss be implemented on a trade at any time? Yes, as long as the trade is open, you can easily modify the trade and put your take profit level or stop loss level. You can also put your take profit level and stop loss level while you're placing the trade. So as you're going to hit a buy or a sell, you just put your take profit level and your stop loss level as you place the trades. But yes, you can implement trade take profit and stop loss on an open trade. Okay. How do you get teaching materials? They're going to be available on the OctaFX YouTube channel, so always check the OctaFX YouTube channel and subscribe so you don't miss out on new episodes. Okay, how can I get access to the economic calendar? All you want to do is to go to your browser and go to OctaFX.com. Yep. So you go to OctaFX.com, and on the menu you're going to see analysis and education. So you want to click on analysis and education and click on economic calendar, which is under analytics, right? Economic calendar is going to direct you to this page where you can see the news, the events that are happening in a country, and on the economic calendar. It's also going to indicate the currency pairs or the currencies that relative to this reports. Like you can see JPY here, you can see euro, you can see dollar, and you can also check for news that was released yesterday, the previous week, this week, tomorrow, next month, and take advantage of the economic calendar to have an idea of exactly what's going on in the economy of a country. Okay. Is it good to place stop loss and leave take profit? I explained why it's important that you use take profit, because the markets cannot move in one direction forever, right? There could be pullbacks, retracements, and you don't want to be in profit on the trade and suddenly the trade just goes straight back into your entry level or goes into loss, right? So you want to use take profit level so that you can secure profits. Okay, so that you can secure profits even if you're not online. Okay, so I've answered your questions. Now it's time to answer my question. So let's do a quick brain test, right? Now the first question is, the ask price is used to open a sell order, true or false? The ask price is used to open a sell order, true or false? Type your answer in the comment section, guys. The ask price is used to open a sell order, true or false? Okay, someone says true. Arinze says true. Princess Easy says false. Okay, so remember, guys, the ask price is used to open a buy order. Now the ask price is above and the bid price is below. I explained this to you guys when I was talking about how to open and close orders. So you can see right here that the buy orders are opened at the ask price, and sell orders open at the bid price. So the ask price is used to open a buy order. Therefore, the answer to this question is false. The second question is the non-farm payroll. The non-farm payroll includes agricultural reports. True or false? The non-farm payroll includes agricultural reports. True or false? The non-farm payroll includes agricultural reports. True or false? Let me know your answer in the comment section. Okay, so the non-farm payroll, remember I told you guys that the non-farm payroll gets its name. I'm seeing a lot of people saying true, false, true, false, true, false. The non-farm payroll does not include agricultural reports. So the answer to this question is false. Remember, I told you guys that the NFP, which is the non-farm payroll, gets its name from jobs that are not included. Farm workers, non-profit organizations, private household. That's why it's called non-farm payroll, non-agricultural payroll, right? Okay, the third question, which is the last question, go ahead and type in the comment section the 12 Federal Reserve Banks, like the geopolitical area of the 12 Federal Reserve Banks. Go ahead and type in the comment section. Okay, somebody's saying Boston. Yeah, Boston is correct. Let me know in the comment section, the 12 geographic areas of the Federal Reserve Banks, the 12 Federal Reserve Banks in the US. Type your answers in the comment section. Bank of Spain is not correct. Nope. Goldman Sachs is not correct. Yeah, Kansas City, yeah. New York, yes. Dallas, correct. Atlanta is correct. Somebody's saying Bank of London. No, these are, reserve banks that are in the United States, right? They represent, a specific geographic area of the US. Okay, Boston is correct. Florida, no. Yeah, Philadelphia, San Francisco, that's correct. Atlanta. Okay, great. So we have Boston, New York, Philadelphia, Cleveland, Richmond, Atlanta, Chicago, St. Louis, Minneapolis, Kansas City, Dallas, and San Francisco. So those are like the 12 geographical area of the 12 Federal Reserve Banks, right? Okay, so I'm going to go ahead and talk to you guys about what we have for the next webinar, what we're going to talk about in the next webinar. The first thing we're going to talk about is the definition of risk management, right? We're going to define risk management. We're going to talk about what leverage is. I'm going to show you guys how to choose your risk to reward ratio, and we'll talk about why you should use proper risk management on your trades. Thank you guys for coming. Don't forget to subscribe to the OctaFX YouTube channel so you don't miss out on new episodes. and don't forget to fill the form in the comment section to get a bonus. I'll see you guys in the next webinar.